Banks and finance companies have put profits before people and been motivated by greed. The Royal Commission made this blunt finding today as it released a damning initial report into misconduct and poor behaviour. The Commissioner, Kenneth Hayne, found that most of the conduct broke existing laws, and yet there have rarely been prosecutions. But he hasn't yet made any recommendations, and bank shares rose in relief. Finance correspondent Stephen Long begins our coverage.
Delivered to the Governor-General, a document that slams the banks and regulators. 1,000 pages detailing how the financial system and those who oversee it have failed the nation.
A frank and scathing assessment of the culture, conduct and compliance of our financial system.
A culture exposed in the hearings that saw the dead charged money for financial advice and the most vulnerable people conned and ripped off in the pursuit of sales.
Make no mistake, today is a day of shame for Australia's banks.
How did it happen? The Commissioner says, too often the answer seems to be greed, the pursuit of short-term profits at the expense of basic standards of honesty. Kenneth Hayne's report is withering about the conduct of a corporate cop that preferred to do deals with offenders rather than prosecute them. It says, when misconduct was revealed, it either went unpunished or the consequences did not meet the seriousness of what had been done.
Good boy.
Natasha Keys is among the thousands aggrieved by the banks. She just wanted time to harvest and pay her debt. CBA wouldn't wait and took her farm.
I went to ASIC out of frustration. I was told that my problems weren't systemic and that they weren't significant enough for ASIC to take on board or to investigate.
Commonwealth Bank whistleblower Jeff Morris helped spark the Royal Commission.
I think it's at the stage where these regulators need to be disbanded and we need a new regulator.
A government that only reluctantly called the Royal Commission now has to confront the problems.
We will take the action necessary to restore the public's confidence and trust in our financial system, which is a vitally important part of the Australian economy.
Given this damning interim report, we believe that there is a strong case to consider extending the Banking Royal Commission.
The interim report asks more questions than it answers, but in broad terms the answers are implied. We need regulators who aren't captured by the firms they regulate, and laws rigorously enforced to make the finance system behave fairly and honestly. Values, the report says, have been sadly lacking. ASIC says it will carefully consider the report's observations. Stephen Long, ABC News.
The banks may have called it a day of shame, but investors didn't seem to think so. When the Royal Commission report came out, financial shares rose. Here's Alan Kohler to explain why.
Well, the bank share prices and AMP did all jump today, presumably because the idea that the banks are greedy is no surprise to the market. And also because the Royal Commissioner didn't recommend that those running them should all be locked up immediately, or worse still, that they be fined billions of dollars. But look, it's an interim report. It's only three-quarter time. The final siren next year will bring a different story entirely. In any case, today's moves were relatively small in the context of what's been happening this year. Here's a chart of the big four banks' share prices since July the 1st, and you can see today's rises there at the end. No big deal. And here's the bank index since the Royal Commission was reluctantly announced by the then Treasurer, Scott Morrison, on November the 30th last year, down 10%. But that's nothing compared to what happened to AMP, which has fallen 40% or $5 billion in value. And the company lost both the Managing Director and the Chairman in quick succession, which sounds kind of familiar. Anyway, there's a wealth of quotes in today's report, but here's a good one. The banks have gone to the edge of what is permitted and too often beyond that limit in pursuit of profit. And they've gone beyond the limit because they can and because they profit from the misconduct. Two final graphs. Financial advisors have been deserting the banks and AMP. Their numbers are down almost 10% from last year. And the banks are up for billions in extra compliance costs and fines. This chart is Morgan Stanley's attempt to quantify that. $1.3 billion already, with more to come. Briefly, the share market as a whole closed high because of the banks going up, and the Australian dollar is trading roughly steady tonight at just above 72 US cents. And that's finance.